Alright class, let's talk about something very close to the heart of any manager, entrepreneur, or even government planner. Break even, or kita ba to o lugi? That's the everyday language of what we call cost volume profit analysis, or CVP for short. Now, don't let the term scare you. CVP analysis is basically a tool that helps us answer some of the most common and most important questions in business and public service. How much should we sell to make a profit? How many clients or patients do we need to break even? What happens if our costs go up or if sales go down? Let me tell you a story. Suppose you are managing a small diagnostic lab in a provincial hospital. You just bought a new machine for 500,000 pesos. Each test costs 200 pesos in materials and technician time, and you charge 500 pesos per test. Now, someone asks, how many tests do we need to conduct per month para mabawi ang gastos? That's a classic CVP question. CVP analysis deals with the relationship between costs, volume, and profit. It's built on three key ingredients. 1. Fixed costs. These don't change kahit walang benta, like rent, salaries, or equipment depreciation. Number 2, variable costs. These change depending on how much you produce or serve, like test kits, electricity, or consumables. And number 3, contribution margin. This is the difference between your sales price and the variable cost per unit. It tells you how much each sale contributes to covering fixed costs and generating profit. Now, the moment your total contribution margin equals your fixed costs, congratulations, you've reached your break-even point. Walang kita, pero hindi rin lugi. And anything beyond that, tubo na, profit. This sounds technical, but CVP can help guide very practical decisions, especially for professionals like you. For example, let's say you're in charge of an LGU cooperative offering food packs. You're planning a feeding program that involves both cost recovery and subsidies. CVP can help you figure out how much to price the packs if you want to break even, or how much funding you'll need if you plan to offer them at a discount. Or maybe you're working in human resources and your department wants to launch a training program. With CVP, you can compute how many participants are needed to cover the venue, speaker fees, materials, and snacks. If the number is too high, maybe you reconsider the budget or look for sponsors. This applies to the private sector too. Whether you are launching a new product, expanding operations, or assessing pricing strategies, CVP analysis gives you a baseline for decision making. Hindi ka lang manghuhula. You can run what-if scenarios. What if bumaba ang sales? What if tumaas ang gastos? What if we increase the price but lose customers? This is where managerial accounting meets real life. It gives us a structured numerical way to evaluate options, especially important when budgets are tight and resources are limited. And here's the beauty of it. You don't have to be an accountant to use CVP. You just need to understand your cost structure and be honest about your assumptions. Once you've got those down, the numbers start to tell a story. And as future leaders, you will be the ones writing that story. So whether you're managing a clinic, planning a project in a local government unit, or leading a team in a corporation, always remember, CVP isn't just about hitting targets. It's about knowing where you stand, what you need to succeed, and how far you can go before things get risky. At the end of the day, being a master in your field is not just about being busy, it's about being strategic. And CVP analysis is one of the best tools you can have in your decision-making toolbox.